In this video, we're going to go over the difference between bills and expenses and how to do them inside of QuickBooks. So let's dive in. So here in QuickBooks, this is my company. It's an Amazon company, so it's not going to be a whole lot of bills per se, but we can kind of go over it. So in order to do a bill or an expense, both of them, you're going to come up here, this new button up here, click it. And then under vendors, we're going to see expenses and bills. Now, the main difference between expense and bills is due in the future, and expenses has already been expensed. It's already been paid. So that's the main difference between the two. Expense, well, we'll just go over expense right now, how to kind of fill out an expense. So an expense is kind of like whenever I buy Amazon inventory. If I'll purchase it, say I bought it from Amazon or something, and I used my checking account, bought it on this date. I don't really worry about the payment method too much or the reference number. The main important thing is, what's it for? So COGS is cost of goods sold, and then put some sort of description in there. Usually this is just being brought over by my bank. That's why this is right here. But you can put in there, purchase for inventory or something like that. What I usually do, instead of actually coming out of my checking account, I usually do it out of credit card because it's just being expensed right away. And then memo, you can put description in memo or however you want to handle that. It doesn't really matter. And then of course the amount that you put in there. Some companies, I have the basic subscription so you don't see it, but there's also customer and class. If you're doing different tracking for different like projects or something like that, there's going to be also more choices there, but I don't have that. And then you hit save and close, and an expense is going to go right to your profit and loss statement. You'll be able to see it on there, and you'll understand that was a cost of goods sold expense. Now bills is a little different. So I'm not going to save it because I don't want to mess up everything on my stuff. All right, so new, up here to new again, and we're coming down to bills. Now bills is different because it's, we're expensing it now, and it's gonna, be charged now, but it's not coming out of our bank account. So we can't put it on a profit and loss statement yet. It's an expense for the future. So what we're gonna do is say, I don't have any vendors, but say we're hiring out someone to do our floors. This is Billy or something. Down here, the terms, it says due on receipt, which is as soon as you get this invoice, it's due. You're supposed to pay it right now, or we're supposed to pay Billy right now. If it's due, if you hire him out every 2 weeks to do some stuff, then it's net 15. So it's your payment, this invoice will be due in 15 days, or this bill will be due in 15 days, and then net 30, next 60, same deal. And the date right here will change according to whatever net you click. It'll show you what date it's due. We'll say it's due on receipt. You can track them by bill number if you want. Put the mailing address of the Billy or whoever you're paying. Category is very important. You want to put it into whatever you're hiring Billy to do. If it's flooring, if it's bookkeeping, if it's whatever, make sure you put it in the right category. Description, obviously put that in there. And then you're going to put your amount and how much you owe them, of course. Now, the difference here is whenever you hit save and schedule payment, it's not going to go on your profit and loss. You're not getting expensed right away. So what it's going to do, it's going to go on your balance sheet as accounts payable. And that means that it's a liability now. It means that you owe that money. If it's due on receipt, then you're paying it right away, so it's not really much of a deal. But say it's due in 15 days. You owe that money in 15 days. So it's gonna go on your balance sheet as a liability. And until you close it out and send it to your balance sheet, it's a liability. And once you do close it out and send it to your profit and loss statement, then it becomes an expense. So a bill eventually becomes an expense, but for right now, once it's incurred, it will be a liability on your balance sheet, and then it moves to there. And I know that this is not, you know, common sense or anything. It's kind of complicated and everything, especially the bill pay and stuff. If you need help with this, I am a bookkeeper. My name is Garrett Jones. I'll have my link in the description. Book a call with me. See if I can't, you know, help you out with your business, and we can go from there. But thanks for watching, guys, and we'll catch you on the next one. Later.